So that certainly means that your portfolio is exposed to a strong US dollar if you have US based equity investments, especially in large cap names, I would say. And that's why we also say that the direction of the US dollar is actually inversely correlated to US equities or risk assets in general as well. So that's something really key to understand for your portfolio.
Hi everyone, and welcome to the Curious Investor, Saxo's video series where we talk about the topics which are driving the investment markets. My name is Fiona, and today I'm here with Charu Chanana here in our Singapore office, where it's also at the end of September. And it's very exciting because we are going to launch our quarterly fall outlook, and probably at the time of this video, you can access it in our platform as well as our website as well. Yeah, so one of the developments or things that we've written about in our quarterly fall outlook is really about FX developments.
Yeah.
Yes, and especially about the King dollar, how is it going to impact us from here?
Yeah, absolutely. There's a huge focus on what's happening on the macro side, what's happening on the FX side, and certainly with the King dollar, like you said, right? Even those who do not trade FX directly, the strength of the dollar is in some way impacting their portfolio. So I think it's going to be a great discussion and pretty useful for every asset class investor.
Yes. So I think before we go into the King dollar and its impacts, maybe we can start off by discussing how did we actually get here? How did the US dollar actually go up so much in the past year?
Yeah, I mean, absolutely. So even the most recent Fed meeting that we've had in September, we have seen the intent there from their dot plot and the way they've been talking about it, that they still want to keep the door open for an additional rate hike at this point, where obviously the market is not pricing that in. Market is still comfortable to think that the Fed has reached an end to its tightening cycle. But their dot plot is showing that we could get another rate hike this year. And it has also tried to push back on the rate cuts that were priced in for next year. So in the markets, we had about 4 rate cuts priced in for 2024. But the Fed's dot plot has shown that we might only get 2. Now, of course, there's a lot of arguments about how good a predictor the Fed's dot plot is. They've usually never been able to stick on the lines of that dot plot. But there's a general sentiment also looking at the kind of economic data that's been coming out of the US. It's been extremely strong. So all of the recession concerns, I would say they've been delayed, but obviously, given the strength of the data, there have been arguments in the market saying that there's no recession coming in the market. A lot of the big investment banks are reducing the probability of a recession in the US after this, big tightening cycle that we've seen. So all that US exceptionalism story, as we've been calling it, where the US economy continues to do well, where the other economies, especially the Eurozone, which is facing stark stagflation risk. There's China, which is trying to announce some stimulus measures here and there, but so far those have proven not enough, and the economic conditions continue to deteriorate there. Property sector continues to be a big overhang as well. So none of the other economies are doing as well, which is what makes the US momentum looks even more positive, and that's obviously been driving a lot of the gains in the US dollar that we've seen so far. And very, very recently, the last few weeks, we've seen the big jump in yields. So again, that is an effect of the market starting to get a little bit more worried about this higher for longer message that is coming out from the Fed particularly, but from some of the other central banks as well for now. And that's yield gains have also kind of underpinned some very broad gains in the US dollar. So it's basically many stars aligning together, but the underlying message really has been the higher for longer message that's coming out from the Fed.
Yes, and as you mentioned about the higher for longer rhetoric that the Fed has been emphasizing, I think, is it really going to be higher for longer? Because economic data seems to be weakening a little bit. So I'm actually not sure whether the US can or the US dollar can actually continue its gains as we've seen.
I mean, that's a fair point. I mean, of course, there have been concerns that inflation is structurally higher, which justifies the higher for longer as well. It's really hard to see how inflation can come back down to the 2% target, and especially if the economic momentum stays as resilient as it is now. it is going to be very hard to bring inflation even cyclically down to the 2% level that the Fed targets. But I think, yes, there are risks that are pretty evident now for the US economy, particularly. In fact, we would say that two-thirds of the economy is already in a recession. It's only the one-third of the economy that makes up the headline, maybe, the the higher spending people or the businesses that have a larger market cap, and that we've seen in the stock prices as well. It's been mostly driven by the magnificent 7 or 8 stocks as we see it this year. So there are these there's only a small part of the economy that is really carrying the load right now. But if you look at the small and medium enterprises, if you look at the middle and lower income groups of consumers, there is real pain coming through because of these higher interest rates. So we've been looking at credit card delinquency is going up, auto loan delinquency is going up, and then on top of it, as we are going into the quarter 4 now, as you said. By the time this video would be online, a lot of the students in the US would have started to pay back their student loans, which were on pause since I think March 2020, if I'm not wrong. So that takes out a bit of their disposable income. There are a lot of stresses, I would say, piling up on the US economy, on the spending side particularly. A lot of corporates are now in that phase where they're refinancing their debt at the higher rate. So that again is obviously working as a form of financial tightening as well. So all of that does point to the fact that the momentum that we've seen in the US economy so far could start to weaken pretty quickly from here as we enter the fourth quarter or go into the first quarter of next year as well. And if that was to happen, now the big question that you have really is whether that can weaken the dollar. Now, the argument really is that, if the weakness in the US economy is still not, if it is still not as stark as what we see in the Eurozone potentially, where we do see greater risks really, then the US dollar could still potentially hold up some of its gains. I do think that the momentum is going to start getting curtailed now as this US exceptionalism story starts to weaken a little bit. But again, even if there is a recession in the Eurozone coming faster compared to the US, then as a safe haven, again, the US dollar gets a bit. So I would say the strength can continue. It may not continue at the same pace as we've seen so far. We've seen 10 consecutive weeks of gains, but there's still room for the US dollar to stay strong because of a safety bid that can come through.
Yes, and I think when we talk about FX markets, it's very hard not to, it's very hard to actually ignore the Japanese yen. Yeah, because it's been moving so differently as compared to all the other currencies.
Yeah.
And also because there's been there's inflation of more than 2%.
Yeah.
In Japan, at least for the past more than a year.
Mm-hmm.
So I think there's been quite a bit of discussion going on about whether there's going to be an intervention from the Bank of Japan. And some of them are also thinking that they're going to actually tweak the policy or raise the short-term interest rates by the end of 2023.
Yeah.
Yes. So definitely want to know your thoughts on this. Do you think that they were really going to raise this interest rates soon?
Certainly, this new Ueda era in the Bank of Japan seems to be somewhat different from what we've seen at the time of the previous governor, Kuroda, where there was massive amounts of stimulus and going through the economy, and there were absolutely no hints of any changes in policy coming soon. With this new governor Ueda taking over, we have had some hints about the fact that we could see those yield curve control tweaks, or we could see that negative interest rate being removed finally in Japan. But having said that, there still doesn't appear to be any urgency to take those measures as well. So, of course, traders and investors are caught in that discussion about when that is going to happen, if at all. So far, what the scenario as of now is that the US yields continue to rise on the back of the tighter Fed policies, but because of the easier dovish BOJ policies, we have a very low Bank of Japan yields, and the differential between the US yields and the Japanese yields, that's quite large, and that weighs on the Japanese yen as well. And there's obviously a carry equation there as well. So much profitable to borrow in yen, invest that in your US dollars, and just get the advantage of the currency and the differential in the in interest rates. Of course, that obviously has brought a lot of speculation as well in the Japanese yen. It has been hurt quite badly last year, this year. So two things here: intervention risks, like you said. Certainly, there is some scope because at some point, a very weak Japanese yen obviously hurts the economy as well. And that's why they don't want to kind of let it weaken at that pace at which it is weakening right now. But again, there's been a lot of reluctance to kind of continue to be in the market. It is a huge cost for the Japanese officials to be in the market, and it does not bring the same amount of gains because the Japanese yen does appreciate. We've seen that in 2022 as well. The Japanese yen appreciated, say, USD yen came down by, say, 5 or 6 big figures at the time of intervention. But that intervention result kind of gets faded over time because, again, the fundamentals still imply that differential between the US yield and the Japanese yield. I would say, yes, intervention risks are there, but whether they will have a a permanent or a more sustainable impact on the currency itself, that is a bit unknown. I think the authorities see far more than just USD yen to kind of understand whether they want to intervene or not. They probably see yen where it is on a trade weighted basis as well, whether the whatever amount they spend on the intervention, will that be worth it? Will the risk reward situation? I'm sure they assess all that, and that's why the delay. So we're getting close to that 150 mark again in USD yen now as we speak, and traders are being cautious. Speculators particularly are being cautious, but if we do see an intervention, I think they get an additional reason to join in that we yen weakness story as well, because it's not expected to have a sustainable effect. Now, whether the BOJ does something or no, like I said, potentially end of 2023 is a very aggressive forecast if somebody's having that. The inflation has certainly been higher, but they continue to kind of say that it is energy driven, externally driven, and not because of the demand side pressures from the economy. And unless we see that, they're certainly waiting to see the kind of wage growth that kind of works its way through this year into the next year's wage discussions as well. And if that is substantial, that obviously could be a reason to start speculating that the Bank of Japan could do something now. But I would say, yeah, by end 2023 is a little bit aggressive to expect that.
Interesting, yeah, and we continue to watch that space. Yes, but aside from the Japanese yen as well, there's been other currencies such as major currencies like the Chinese yuan, as well as euro dollar. That has been also been moving quite a bit in this year, and I think especially for the Chinese economy, economic data hasn't been improving as fast as people would want, and that has also affected their currency. And I think right now as well, with the Evergrande situation, and September data that just got released as well, with it shows that the economy and the consumer spending is actually slowing down, as well as the slowing down in their exports as well. So maybe we can discuss a little bit more about the Chinese yuan. But I think also for the euro dollar, there has also been weakness in the economy, especially with the major player, which is Germany. The manufacturing output has dropped a lot, as well as the stagflation risks that has been top of mind for the European economy. Where do you see their currencies also being impacted moving on from here?
Yeah, absolutely. So, all the currencies have seen the pressure because of the strength of the US dollar, as we discussed at the beginning, right? And for the Chinese yuan, again, it's a very clear-cut case of policy differentials, of growth differentials between US and between China. China certainly, as you mentioned, economic data, well, I think it did start to turn around a little bit, but it's really coming off from a very low base, and the stimulus that they've announced so far hasn't really proved enough. So there's expectation that there's going to be more stimulus, again, that also weighs down on the Chinese yuan. I think there's going to be potentially some efforts from the authorities to keep the pace of depreciation as measured as possible. But I don't see how they can really reverse again, this weakness in the Chinese yuan as long as those differentials in policy stay between the US and China. Now, of course, I mean, there could be a situation where the US growth starts to slow, as we discussed, and China numbers start to look a lot better because of all the stimulus announcements that continue to go in there. And that could, give some life back to the Chinese yuan. There is obviously, from a valuation perspective, positioning perspective, there's going to be a room for improvement. The same goes for the Japanese yen as well. If Japan growth continues to stay stable, whereas US starts to weaken, if US yields start to go down from the high levels that we have right now, we could see a recovery in some of these currencies where, maybe especially for Japan, where growth isn't looking all that bad right now. From a China perspective, I would say there is a lot of scope of improvement. They are announcing measures to do that. So even if it's a tactical rebound, it can help the currency in some way. For the Eurozone, on the contrary, I would think the risks are really quite high. Germany, as you said, again, there were some very small indications in the recent numbers that Germany may have bottomed. But again, I think it's too soon to say that. Germany has retained the tag of the sick man of Europe. And certainly, even if there is an uptick in industrial production a little bit in Germany, that comes to weigh down on euro in a way, because that means that demand for energy, demand for natural gas goes up if industrial production is recovering. And if demand for natural gas goes up, and given the situation where Europe is right now with the Russia war going on, an 8-10% increase in natural gas itself brings euro down. So it is a stagflation risk again. So it's quite complicated what Europe is going through, and plus, of course, it's a big zone, and the ECB has to manage something from Germany, but also has to look at what's happening in Italy. And if you look at the bond yield spread between Italy and Germany, that's widening a lot. There's a 200 basis points mark, which is considered to be the toleration limit for the ECB. And it's reaching close to 200. I think it might be above 200 now as we speak as well. So if it's above that 200 basis points mark, it is really a new headache for the ECB as well to handle, because Italy's fiscal deficit is ballooning. So they can't continue to kind of tighten policy as well in that environment. So a lot of complications for the ECB. So certainly does not look like to be an easy path, and it does appear that there's potentially going to be more downside for the euro with that respect.
So you've covered a lot of good points about how the US dollar will potentially be staying higher for longer, especially because other economies and currencies such as the Japanese yen, the Chinese yuan, as well as the euro dollar, will still take a bit of time to pick up because of their economy. Yeah. So if you're not an FX trader, then how does a stronger US dollar actually impact you?
And that's a very good question, actually. So I would say, it particularly impacts you if you have investments in US dollar assets, right? And I think a lot of us, even here in Asia, around the world, everyone has a lot of investments in some way or the other in US dollar assets. So I think two key ways how it can impact the US economy and US markets is that with a strong dollar, the US export demand could get hit. And that obviously, from a very macro perspective, that means that the US economy could slow down, and it shows up in the earnings or the equity performances of the stocks that you hold if you do. And secondly, of course, there are a lot of companies themselves who have these multinational revenue generating centers. For those companies as well, particularly for those investments in big names, in big tech names, for instance, if a strong US dollar will hit their earnings, and that means that their equity performances, again, stock performances, could get hurt as a result of that as well. So that certainly means that your portfolio is exposed to a strong US dollar. if you have US-based equity investments, especially in large cap names, I would say. So I mean, and that's why we also say that the direction of the US dollar is actually inversely correlated to US equities or risk assets in general as well. So that's something really key to understand for your portfolio. Are your companies, the companies that you're invested in, are they getting hit? Are their earnings getting hit because of the strength of the US dollar? And then there are other ways, for people who invest in commodities. Commodity prices could be falling down because of a higher, because most commodities are priced in the US dollar. So a higher US dollar means commodity prices could be going down as well. If you are an emerging markets investor, again, that's going to be extremely important because a lot of emerging markets will start to face a higher burden of their USD denominated debt. They have to make bigger repayments, and some of the more vulnerable economies, more frontier vulnerable economies, could start to see that bite into their economic structure as well. So a lot of risks certainly to be aware of, even if you're not an FX trader.
Yes. So I think, as you rightly said, there is an inverse relationship between the US equities as well as the US dollar.
Yeah.
So perhaps, a way that those people who are invested into US equities, they can hedge their portfolios by potentially looking at going into longing the FX or longing the US dollar.
Yeah,
directly.
long US dollar is certainly a hedge for a risk asset.
Yeah.
So that's a very good option, I would say. If you particularly if you think that US dollar would stay strong and US equities would come down from here because of recession concerns or because of the strength of the US dollar or whatever. So yeah, a long US dollar potentially is a great idea. Yeah.
Yes, and I mean, I think aside from that as well, here in Saxo on our platform, we do have other options for traders and investors to express their views for FX.
Mm-hmm.
So we have FX options, which now could be quite exciting because there's volatility, a bit of volatility in the FX markets, FX swaps, as well as FX forwards that can help to hedge some of the risks.
Yeah. I mean, I think the other great way, and I've tried to look at the returns. If you go to the Outlook PDF document that would be available on our website and our platform as well, you would see I've put in a chart there that actually hedging is a very tactical thing. If you have some very strong views about the currency going in a particular direction, perhaps hedging can be helpful. But over a longer term horizon, the returns of a hedged versus an unhedged portfolio do not change a lot, right? So I think the best way to hedge really is also diversification. And what a strong US dollar is doing right now is that it is making some of the assets in the emerging markets, in the outside the US, in the international space, look very cheap. So it's probably, again, a good time to diversify and, add on to your portfolio some assets which are not directly correlated with whatever positions you have right now.
Yes, that's a very interesting point. And we have also, discussed about other economies that we think are picking up. Yeah. For example, India.
Yeah,
as well.
Absolutely.
Yes. So, and to make it even better, on the Saxo platform, we actually do provide give you interest on your USD deposits and up to 4.56%. So you can actually consider to park some of your funds here while you actually look at the opportunities to enter the market anytime, because there's no lock-in period for to earn this interest. Yes. So we have actually included the links to our quarterly 4 outlook below this video. And if you found this video interesting, please give us a thumbs up and also subscribe to our channel. Thank you, and see you in the next video.